Wealth doesn't come from luck. It comes from understanding the right principles and doing the right things long enough. This video isn't about getting rich quick. It's a complete roadmap for financial growth, helping you leverage compounding power at the highest level. From stocks, real estate, investment funds, to health, skills, and personal business. Each strategy here is a lever that helps you turn income into assets and assets into freedom. This isn't just a financial guide. It's how smart people design their future. And if you're ready to move from simply earning to truly building wealth, let's begin with the first principle: understanding the true nature of compounding. Compounding is not just a formula, it's the core engine behind all sustainable wealth. It doesn't deliver results overnight, but it explodes over time if you're patient. Each small action, repeated in the right direction long enough, creates leverage far beyond your effort. Wealth doesn't grow because you work harder, but because you let money work for you. This is the foundation of lasting growth. Compounding only works when it's uninterrupted. The biggest threat to compounding is impatience and inconsistency. One decision to withdraw early or change strategies too often can reset everything. Those who understand compounding don't just understand numbers, they understand discipline. They know the greatest rewards always arrive late, but when they do, they can alter your entire financial trajectory. Time is the fuel of compounding. Starting just 5 years earlier can double your final result. Don't wait to have more money. Start small, but start early and never stop. Compounding doesn't care how much you begin with. It only cares whether you're disciplined and consistent to see it through. Success doesn't come from breakthroughs. It comes from relentless consistency. Growing through stocks. Stocks aren't lottery tickets. They're your share in the world's growth. When you invest in stocks, you're not hoping for a quick gain. You're aligning with companies that create real value. Hold long enough, and compounding will quietly multiply your returns year after year. Stocks don't promise instant profit, but with time and reinvestment, they can generate extraordinary wealth. The best way to maximize compounding in stocks is to invest regularly and reinvest dividends. Instead of spending your dividends, use them to buy more shares. Each tiny addition builds more returns, which create new returns. This is how compounding gains momentum. Markets fluctuate in the short term, but quality companies tend to rise in the long run. Let time be your ally. What's crucial is picking solid stocks and holding them long enough. Don't let market noise shake your conviction. The winners are those who trust the long game. You don't need to trade constantly or time the market. Stick to your plan and let compounding work its magic. In the world of stocks, patience beats panic. Real estate compounding. Real estate is more than a physical asset. It's a powerful wealth engine. When you own rental properties, you gain two income streams: long-term appreciation and monthly cash flow. If those profits are reinvested through upgrades, additional purchases, or larger assets, you create a flywheel of value. Property lets you preserve capital while building passive income. The key advantage in real estate is leverage. You can control $1 million asset with a fraction of your own money through financing. If the property rises 10%, you're earning on the full value, not just your contribution. This is where compounding accelerates through financial leverage, but it requires smart management to avoid risky debt. Real estate also offers tax benefits and intergenerational wealth. Deductions, depreciation, and transfer strategies help optimize actual returns. More importantly, properties can be passed on, providing income for future generations. Investing in real estate isn't a one-time move. It's a long-term system for building wealth. When done right, it becomes a stable compounding ecosystem. Dividend stocks. Dividend stocks are ideal for long-term investors seeking cash flow and growth. You earn from both stock price appreciation and regular payouts. If you reinvest those dividends consistently, you activate a powerful compounding cycle. It's the perfect formula, growing your share count while multiplying future income. Over time, those small payments become a serious wealth engine. The smartest strategy is full reinvestment. Every dividend check goes right back into buying more stock. That means more shares generating more dividends, repeating endlessly. This self-funding loop adds up, slowly but surely. The longer you stay in the game, the larger your compound returns. It's the quiet path to substantial financial gains. Beyond income, Dividend stocks bring portfolio stability. During volatile markets, steady dividends provide a safety net. Companies with consistent payout histories are usually strong and reliable. Choosing these stocks gives you not just passive income, but resilience. Dividend growth investing means rising income, beating inflation, and compounding security. It's a long game, but a winning one. Safe bond strategies. Bonds offer stability for those who prioritize safety and predictability. When you buy a bond, you're lending money and earning fixed interest. Though returns are modest compared to stocks, reinvesting that interest starts a quiet compounding effect. Bonds act as the steady base of a diversified portfolio. A smart approach is laddering, buying bonds with staggered maturity dates. This ensures a steady stream of income while adapting to changing interest rates. Bonds often rise when stocks fall, smoothing overall returns. Reinvesting interest payments maintains your compounding rhythm. Bonds may not excite, but they balance, stabilize, and quietly grow your wealth. ETFs and mutual funds. ETFs and mutual funds are perfect tools for investors looking to harness compounding easily and efficiently. When you invest in an ETF, you're buying hundreds of stocks or bonds in one transaction. The strength lies in diversification, low cost, and steady growth aligned with the market. Instead of picking individual assets, you're investing in an entire basket, spreading risk and capturing broad returns. This is how compounding operates at scale, quietly growing wealth across the whole economy, not just one stock. One of the biggest advantages is automation. Many funds offer dividend reinvestment and capital gain reinvestment without manual input. Every return gets reinvested, creating another layer of compounding. Low management fees ensure more of your money stays invested and compounds over time. This hands-off approach rewards discipline over emotion. You don't have to watch the market daily. You simply stick with the strategy, steady, consistent, and automated. A smart tactic is to choose index tracking ETFs, like those following VM30 or the S&P 500. Combine that with monthly contributions and automatic reinvestment, and you unlock continuous, long-term growth. ETFs and mutual funds aren't just for beginners. They're ideal for experienced investors seeking scalable, low-maintenance wealth building. Used correctly, they become a self-sustaining compounding machine that grows in the background while you live your life. Retirement accounts. Retirement accounts are like financial greenhouses where compounding grows uninterrupted by taxes or emotion. Contributing to plans like a 401k or IRA is planting seeds for your future, nurtured by tax advantages and long-term consistency. The earlier you start, the more powerful the effect. Returns inside these accounts grow tax-deferred or even tax-free, allowing compounding to accelerate over decades. With time on your side, small contributions transform into significant assets. These accounts aren't just savings tools. They're structured systems for long-term wealth building. The optimal strategy is consistent contributions, maxing out annual limits, and choosing low-cost, growth-oriented funds. Automating deposits instills discipline and ensures your investments work every month without fail. These contributions become habits that build wealth almost invisibly. Unlike taxable accounts, retirement plans shield your gains from annual capital gains taxes, compounding without interruption. Whether your goal is freedom at 50 or stability at 65, retirement accounts are the backbone. They don't just give you money, they give you freedom, time, and options. Long-term wealth isn't an accident. It's what happens when smart strategy meets patience. Investing in yourself. No form of compounding is more powerful or sustainable than investing in yourself. Every skill you learn increases your value, opens new income opportunities, and gives you leverage that no market fluctuation can erase. Knowledge compounds invisibly, but it's what turns average people into high performers. Every course, book, or hour spent practicing adds to your future earning power. While markets may swing, your personal value never depreciates. When you learn consistently, you increase not just your knowledge, but your confidence, adaptability, and long-term capacity to generate wealth. This kind of compounding isn't visible on spreadsheets, but it transforms your thinking, execution, and results. When you grow, your ability to create, lead, and solve problems expands. You become harder to replace, faster to adapt, and quicker to seize opportunity. No investment gives you more control than self-improvement. You don't need massive capital, just commitment, time, and the courage to stay curious. The knowledge you build today becomes the income engine of tomorrow, and unlike stocks or real estate, no one can take it from you. Personal growth is not optional. It's your most scalable and resilient asset. Health and finance. Health is the invisible foundation of every financial journey. You can have a perfect investment portfolio, but without the energy to manage or enjoy it, it's meaningless. A healthy body sustains high productivity, sharp decision-making, and consistent execution. Poor health leads to procrastination, burnout, and setbacks, even with the best financial strategy. Investing in physical well-being isn't a luxury. It's the ultimate insurance for wealth. Regular movement, smart nutrition, and quality sleep aren't expenses. They're compounding habits that protect your ability to earn and grow. A strong body fuels a strong financial future. Mental health is just as essential. Emotional stability helps you stay calm when markets fall, avoid reckless decisions, and maintain perspective in high-stress environments. Simple practices like mindfulness, therapy, or time in nature can dramatically improve focus and resilience. These invisible investments build your emotional armor. You can recover from a market loss, but recovering from chronic burnout takes far longer. Health doesn't show up on your net worth statement, but it multiplies everything it touches. Without it, even the best strategy crumbles. With it, every goal becomes more reachable. Long-term wealth requires long-term wellness. Prioritize both. Personal business. Owning a business is one of the fastest and most scalable ways to unlock compounding returns. You're not just earning profit, you're building an asset that grows in value with each customer, system, and innovation. Every new product, hire, or automation becomes a multiplier. Unlike a job, there's no income ceiling. You control the growth curve. When you structure your business for scale, not just survival, you activate layers of compounding that go far beyond personal effort. A well-run business doesn't just generate cash flow, it builds equity, freedom, and long-term wealth. The real magic comes from leverage of time, systems, people, and technology. When you stop trading hours for income and start creating systems that operate without you, you move from income to impact. Businesses also offer tax advantages, strategic reinvestment options, and generational transfer. It's not just about money now, it's about building an empire that outlives you. Starting is hard, staying consistent is harder, but the rewards, exponential. When you align long-term thinking with daily execution, your business becomes a living compounding engine. You don't just own a business, you own a future. In conclusion, compounding isn't a trick, it's a timeless principle that rewards clarity, consistency, and courage. Whether through stocks, real estate, retirement accounts, skills, or business, wealth isn't built in bursts. It's built through daily discipline and long-term vision. Each strategy you've explored is a lever. When combined, they form a complete ecosystem for exponential growth. But the system only works if you do. Start early. Reinvest relentlessly. Think decades, not days. Wealth is not a finish line, it's a process. And those who master compounding don't just grow richer, they grow freer. Now is your moment. Take one principle, apply it today, and let time do what it does best. Multiply everything you commit to with intention.